Good afternoon and welcome to our very first episode at CarCityUk of Behind the Scenes. Today we're going to address a matter that's really important to everyone in the UK. Well, they'll have either dealt with it at some point in the past, they'll be dealing with it now, or they will at some point in the future. And that matter is the matter of finance. Today we have with us Simon, who's our business manager. And Simon's been in the industry for at least 25 years, I'd say.
A bit more, but yeah.
Yeah, he's dealt with finance since the very beginning, and he's someone who's an expert at this. So, Simon, what have you seen that's different since the very beginning in the motor trade that you started to now in finance?
Probably the biggest change I've seen, probably in the last 6 months to a year, is what we would call third-party finance. What that is, people who arrange the finance before they come to the dealership. Now, for me, that is a major issue in terms of what the customer experience is, because these finance companies don't sell cars, they only sell finance. So customers who we would probably get a better interest rate for don't believe they can get that better interest rate because they're going to a third-party finance company who tell them that that's the best rate they can get. They then come to us, pay basically cash to us for the car, not ever knowing that they could maybe have saved 2, 3 or even more % every month on the payments.
And would you say that the fact that they have to have their interest rate a little bit higher is down to the fact that they've only got the finance to sell, they haven't got a product?
Yeah, they, as I say, they don't sell cars, they only sell finance, so the only way they can make money is by charging a higher interest rate. So
Simon, can you just explain to our customers please, in terms of interest rates, what is a typical interest rate that they could be expected to get on one of our cars?
Our cars generally, you're looking around between 10.9 to 11.9 APR would be the standard rate on our cars.
And what about something that's like, say, I don't know, maybe 70, 80,000 pounds or more?
If the car is over 50,000 pounds, we have 2 or 3 different lenders who will do a special rate of 8.9, which obviously on that value of car saves a lot of money. Okay,
so is it fair to say that our packages can be bespoke to individual customers?
Yes, absolutely, yeah. That basically what I do is if I get a finance proposal that comes in, I look at the soft search on a customer, I then put it to the best lender for the customer to get the lowest possible payment, and it doesn't have to be an exact number of years. It can be 3.5, 3 years, 9 months, 4 years, 8 months, whatever fits right into the customer budget, we can arrange.
So we can basically tailor make a deal to suit their needs?
Absolutely, yes.
That's great. Yeah. Also, Simon, can you just explain to me, so you know, some customers who haven't had finance before maybe don't quite understand how it works. So let's just give me a way that a customer could pay off the finance. If, say, they borrowed a car that was £20,000, they borrowed it over 60 months, and they just came into some money and they just decide that they don't want to have that monthly payment anymore.
Yeah, it's a very good question, that, because probably the best way to describe car finance is almost like a credit card payment. So let's say you're paying £200 a month or £300 a month. If you see that as your minimum credit card payment, but at any point you can make extra payments or settle the finance early. When you make extra payments, that reduces the total amount of interest payable. And if you settle early, all of the outstanding interest gets knocked off the balance.
Okay, so basically they could have an outstanding balance of, I don't know, the total amount payable could be like £25,000, but they pay it after 12 months, therefore they'll get a rebate.
Yes, absolutely. They'll get all of the outstanding interest, other than the month they're in, will be knocked off the settlement figure, so they'll get a rebate of outstanding interest.
And is there any fees involved with that? Will there be? No fees. Okay, that's good. Simon, what would you say is the biggest advantage in using car finance?
As distinct from a personal loan? Or
as a personal loan, or even using your own cash?
Well, for me, the biggest advantage of using car finance is that you don't dip into capital. You're paying monthly, because let's be honest, almost every car that we buy or anyone else buys will depreciate. So in terms of an investment, if you put £25,000 of your hard-earned money into a car, in a year it's not worth anywhere near £25,000. However, if you're paying a monthly figure for the car, you're paying for that out of your disposable income and you're not tying up your own capital. If you're comparing it to a personal loan, it goes against your credit file as a personal loan. It's not secured against a vehicle. So if, for example, you wanted to get another loan, or if you wanted to go for a mortgage, for example, the personal loan may have a detrimental effect on your ability to gain more credit. With car finance, hire purchase, PCP, lease purchase, it's secured against the vehicle, which means that there's an asset attached to it, so that doesn't have as much of an effect if you try to obtain more credit for something else in the future.
And would you say it's advisable to put a sizable deposit when you're buying a vehicle, or would you put the bare minimum?
That would depend on probably the individual circumstance. If it's a PCP, I would recommend a smaller deposit, simply because you're deferring the projected value of the car to the end of the agreement, and you don't want to put in a massive deposit in the front, because all you're doing then is having a false low payment. When you come to change the car, your payment will increase if you don't have the same deposit next time. However, if it's hire purchase and it comes down to a monthly budget, the deposit, anything from, let's say, £100 to even 50% of the car would benefit, because at the end of the term, you don't have anything left to pay. It's paid for, and you may, if you have the lump sum, yes, put it down. I would always probably recommend about 10% deposit on a car, simply so that your monthly payment's manageable and you're not, again, pulling out capital for the obviously reasons I've said.
I think one of the misconceptions out there at the moment for the consumers is that PCP is just cheaper by £200-300 or whatever it may be. Now, a lot of customers don't realise that you have to qualify for a PCP and there's certain parameters that you need. Mm-hmm. Do you want to just explain to them what it normally entails for them to be able to get a PCP, and how it would benefit them against a HP, and if it would benefit them?
Yeah, well, PCP, the parameters are slightly different. They work on probably a very similar sort of credit scoring, but it has to be a certain age and mileage of vehicle. Mm-hmm. A PCP, basically what you do is, for let's take the example of a 4-year PCP. It is basically worked out on you're paying the depreciation in terms of a monthly payment, and at the end of the term, the balloon payment, if you like, is the projected guaranteed value of the car. Mm-hmm. So what that means in real terms is, if you have a final payment of £13,000 at the end, and your car was only worth £7,000, the finance company would take that £6,000 loss, because they have guaranteed that your car's worth £13,000. Obviously there's mileage restrictions, but we set that up to the right mileage what you do. So a PCP generally works out cheaper because you're only paying the depreciation and leaving the final payment till the end. Hire purchase, you're paying obviously capital and interest. But like we said before, every deal needs to be looked at on an individual basis, because someone who's doing 30,000 miles a year, yes, the PCP might look attractive, but unless you set it on 30,000 miles a year, it's not going to benefit them. And
I suppose that's why we're here. We are professionals. We've been in this industry for the last 25 years plus. We've seen these, we see these on a day-to-day basis. So we can advise them.
Yes.
We can advise them on basically what they need. Not what we think they need, but we assess their needs.
Yeah, well, again, this is one of the major benefits of going to the dealer to arrange your finance, because we will listen to what you actually are going to do with the car, what you need your payments to be, and we will tailor the package to best suit you.
Yeah, you're right, which is something those online finance companies don't have the luxury of doing.
They don't
have that personalisation. You're not asking about your family, what your family needs are, how you're going to use the car. So all they're doing is they're just plucking some figures out of thin air.
Yeah, all they're interested in is getting you the finance. Mm-hmm. And if that means it's slightly cheaper on one particular finance route, that then becomes the most attractive option, but it may not be the best option for the individual customer.
So as we've seen, in the recent times, there's been some issues with commissions, and the FCA have come out and they thought that some dealers have been a little bit, naughty. There's some finance houses that they believe have been a bit naughty, and it's a bit up in the air. Now, we've always maintained that we'll always look after our customers. So how can we guarantee that when we make a recommendation or when we offer something, it's for the customer and it's the best option for them rather than us?
Yeah, again, that's a very good question. But it's no secret that we do make commission out of selling finance. However, what I do and what we do at Car City is we always look for the best option for the customer. Because bear in mind, like I said before, Mario, we are interested in selling the car and we use the finance to help the customer buy the car. So all commission is now fully disclosed to the customer. So before the customer signs the documents, they have to see what the commission is. Now, as I said, there's no secret, we do make commission out of finance. But I'll give you an example. If I send a deal down to one particular finance company and they accept the deal at, for example, 12.9% APR, okay? That would pay a certain amount of commission. If, however, in the meantime, the first finance company I sent it to, who didn't immediately accept it, if I appealed that decision and they came back at 10.9, regardless of whether the first or the second deal made the most commission, we will always go back to the customer with the best payment for them.
So to make this clear, we don't choose the commission that's highest for us.
No.
We go for the deal that works out cheaper and better for the customer.
Yes, absolutely.
That's perfect. That's how it should be.
Yeah, because at the end of the day, in terms of treating customers fairly, which I like to believe that we do, we have to give them the best possible payment.
Yes, I agree with that. That's best practice. So, Simon, obviously you've been in the industry, like we said, for many, many years.
Yeah.
Yeah, and let's just assume that yourself or your mother was looking to buy a car. Would you use finance to buy that car?
Yes.
And why?
Well, I can tell you, every single car I've ever bought from a dealer has been on finance. Every car my mother's bought has been on finance. And the reason why is because I would never advise my mother to pull capital out of the bank to buy a car. Like I've said before, it's a depreciating asset. Use your disposable income to pay for a car rather than pull out a lump sum that you may need for something else.
Is it almost like saying, well, if you've got £10,000 to pay off for the car, use that to pay off your mortgage?
Yes.
Because it will save you a lot more in the long run.
Yeah.
And it's an appreciating asset against a depreciating
Or
asset.
go and enjoy a lovely holiday with it. You know what I mean? Use the money for something that is much better than something that parks on your drive that you use to go back and forward to work in, that in a year's time is worth a lot less than what you paid for it.
I agree. And talking about holidays, you've picked the right time for it. It's absolutely freezing, isn't it?
Yeah, brutal. Yeah.
So I would like to say thank you very much everyone for watching. This was our first episode. We'll be doing plenty more of these. We'll be showing you some behind the scenes. We're going to be showing you some sales, some purchasing of the cars. We've got a lot planned for you. And again, thank you very much for watching, and we'll see you again.